Greetings, members, one and all of the Salivation Nation. Look at these metals prices. They're getting hammered. Let's find out why. I think most of us know. And how low will they go? Yes, first from Kitco, gold and silver got hammered to 3-month lows, and it's by bullish equities and low risk aversion. The biggest reason, I believe, is because of the China and the trade talks. Safe haven gold and silver prices are sharply down and have slumped to 3-month lows in midday trading on Thursday. The precious metal bulls continue to be hamstrung by rallying world stock markets that saw the U.S. indexes score record highs again today. Some chart-based sellers are stepped into the futures market on the sell side today as serious near-term technical damage has now been inflicted in gold and silver's markets. December gold futures were last down $28.30 an ounce at $1,464.80. December COMEX silver prices were last down 0.0578 at $17 and basically 3 cents an ounce. So the markets are doing really well, the stock markets, and people are obviously going away from gold and moving into riskier assets. Asian and European stock indexes were also mostly up on Thursday. Trader and investor risk appetite remains elevated as the news from the U.S.-China trade front remains very upbeat. Reports from China Thursday said both countries have agreed to remove their tariffs in tranches. The report said tariffs would be eliminated once the Phase 1 partial trade deal is signed. And that hasn't happened yet. So these metal prices could move the other way based off of the psychological aspect. So this can be very temporary. There has been no official word from the U.S. on this development. While it is positive, a trade deal still has to be signed. And remember, the trade negotiations between the world's two largest economies have been a continuously up and down affair regarding progress. Given this history, it seems unlikely both nations will just now cruise at the finish line with the trade deal. And again, this is just phase 1. This is just a partial agreement. The Chinese yuan continued to strengthen against the U.S. dollar on the trade deal optimism. The Bank of England held its regularly monetary policy meeting Thursday, but no change in interest rates occurred, as expected. The gold and silver market bulls are in need of a geopolitical jolt, which will occur at some point in the future, but nobody knows when. The key outside markets today see the U.S. dollar index higher, which is also negative for the metals markets. NYMEX crude oil and prices are higher, trading around $57 a barrel. This goes into some of the technical analysis on this stuff and copper and silver. But you can see here with the prices moving down on this news, the biggest loser, as is expected in the case when the prices go up, is silver. Silver is the biggest winner when the prices go the other way. But in terms of dollar amount, gold took the biggest loss, losing $21.90 per ounce. So it's way below that $1,500 level now. I did make a purchase. Some of you saw the video, but I also made another purchase when the prices were higher. But this is more of somewhat of a collector kind of coin, but that has moved into bullion territory in terms of pricing. So this particular coin it was at a price that I've not seen it at in quite some time. So I picked it up. But nonetheless, I kind of wish I would have waited. But, it's all said and done, it's hard to really time these things, the markets completely. Some people better at it, and I have done fairly well in some cases making purchases when the prices kind of dip down. I didn't expect them to dip this much, or obviously I would have waited. Now, some people did know they were going to dip, and this article from an opinion piece from MarketWatch is how some investors knew gold was about to slide. And I posted a video earlier by something that was sent to me by Centuria Sylvia about that, and this is a little different take. The gold market's exuberance is catching up with the yellow metal. Gold prices were down more than 1.5% on trading on Thursday, building on their earlier losses. All told, bullion is now almost $100 lower than where it stood 2 months ago, when the author, Mark Holbert, argued that excessive optimism among the gold timers meant that gold's near-term direction was down. The shares of gold mining companies have been hit particularly hard. Vector's Gold Miners ETF is 50% today lower than where it stood in early September. Unfortunately, gold market sentiment is only marginally better today than it was when he wrote about it before, though the average recommended gold market exposure level among gold timers has retreated somewhat this week and remains elevated. In fact, it's still higher than 70% of all daily readings since 2000. The average exposures level is what is measured by the Holbert Gold Newsletter Sentiment Index. The average stood at 56.3 when he wrote this early September column on gold market sentiment. It got as high as 64.6% earlier this month before dropping back this week to 43.8%. The latest reading is at the 71st percentile of the daily readings. Contrarians, therefore, believe that gold will have to decline even further before bullish sentiment recedes sufficiently to create a short-term buying opportunity. How low must gold go? To find out, he entered his PC statistics software from the HGNSI's daily values back in 2000, along with the prices of varying benchmarks for the performance of gold mining shares. So it's a calculation that he did. So basically, the benchmarks has produced significantly higher returns following the 5% the lowest HGNSI readings than followed the 5% that were the highest. Those thresholds are minus the 23.3% and plus 66.5% levels. The difference of subsequent returns following these thresholds is illustrated in the accompanying chart of the ETFs, of the gold mining ETFs. And I don't know if I buy into all this stuff, but basically it's calculations based off the this author's own theories here, and finding that when it's 5% of the highest readings and stuff like that, you're getting into some extremely technical analysis here and contrarian things and theorizing. And technical analysis is not where I like to dabble in there, but really, people could see this coming even outside of this. All they have to do is look at trade and look at psychology. If you get a couple of days of good trade news, then you're going to see these drops. I didn't expect to get this much, and in fact, my guess is we really won't see, when you talk about announcements about easing of tariffs, that is going to be only temporary, I believe, until it's signed. So that's why I was kind of surprised at the lowering of the prices as much as they were. But that's how the markets work. It's emotional. So I'd say ignore all this stuff about what this guy is talking about, mining shares and everything like that, or contrarian, following these kind of charts or graphs from ETFs from a mining company. I would say just stay tuned and look and just take in the information each day on the markets and the news that comes out with the geopolitics. There's where you're going to get the most movement in prices. Screw technical analysis, in my opinion. That stuff really doesn't. It all is out the window until you see what happens with gold and silver in terms of some stuff, especially with China. So that leaves us with this question. Let's say phase one is signed soon, within a couple of weeks. What's going to happen to gold and silver then? And these high prices that we've been seeing, these floors we've been talking about, silver is getting very close to the floor that I talked about, the resistance level of $17. It's getting very close back down to that point. What happens if something is signed? Will it go below that? And these prices for gold and silver, think about them. The only reason why they're there is because of fear. Fear, uncertainty, and doubt. The FUD. That's right. The Federal Reserve. And that's right. That's the one thing that we have to think about here in terms of gold and silver. Fear, uncertainty, and doubt rule the day with these high prices. Not necessarily based off of the sentiment of logic and reason. We have a good economy. It's undeniable. The economy is doing really good here in the United States. And the Yes, there's some certain factors and outliers out there, but by and large, we've been sustaining very good growth here in the United States. And that is something so that means these high prices are based off of fear, uncertainty, and doubt. So when you take away some of that fear, uncertainty, and doubt, like a signed trade deal, then how low will these prices go? What are your thoughts? Post them in the comment section below. I'd be very curious to see what you think, because obviously this is what's driving the prices today. And where will they go now? How low do you think silver will go? How low do you think gold will go? Platinum took a big hit today too. Palladium has actually continued to rise up. It's at over $1,800 an ounce now, breaking records, which means that there's more demand for the metal. So it makes sense that it's going up because it is an industrial metal and it's needed. And I guess there's a shortage right now. So there you have it. Post your thoughts below. I'd like to extend a multitude of gratitude, y'all, for watching. And I want to encourage you to please rate, share, comment, and subscribe.